I've known these two guys for quite a while, and probably about a decade or so ago, they were the young Turks of the TA scene with Kaplan or Fincia, as it may have been at the time, and very good students, did well in their studies, and both of them were very, very keen and always eager to learn. And it's good to see that they've really kicked on with their technical analysis. They've got a huge following on the internet, on YouTube. And I have to admit that from time to time, late at night, I log on and watch Thomas do his thing. So it is quite interesting to watch.
Know that, Larry. I should have seen you in the chat rooms.
You've seen me?
No, I haven't. I
haven't. No, I don't enter the chats. I just have a sneaky look in there and whatever. Yeah, but and I think they're both very well qualified. I think Tyrone has gone the route of getting just about every TA qualification that's available. Is that right, Tyrone?
It is, yeah, and I actually blame Larry for all of this. He pretty much started it all.
Planted the seed, did I?
It is effectively about 10 years ago now, yeah. So he's planted the seed, and yeah, no, we've certainly taken it off from there. But we do actually have a lot of gratitude for Larry, because he definitely started us off on the right track. And we've been lucky enough to be able to forge a career in something that we absolutely love. So it has been actually really good.
Oh, that's great. Yeah. So that's probably about all I've got to say. If someone, I haven't got the formal bio and whatever that you sent along. Have you got it, John or Ken?
The topic tonight is price action lightning bolt and the real power of market momentum. We have Tyrone Abela, is head of investment management at FX Evolution. He's a co-founder of a company in 2010. Tyrone has numerous successful trading strategies that are highly adaptive to the volatile and ever-changing financial markets. He holds a diploma in financial planning and an Authorized Derivatives Advisor Level 2 accreditation. He also holds a Master of Finance Technical Analysis, a Master of Business Admin, and the designation of a Certified Financial Technician, awarded by the International Federation of Technical Analysts, and the designation of Chartered Market Technician, awarded by CMT in New York. Thomas Atkinson is the Chief Technical Analyst at FX Evolution, specialising in global and domestic markets and the development of industry relationships. He was co-founder with Tyrone in 2010 in setting up the company. Thomas holds Authorized Derivatives Advisor accreditation with multiple ASIC regulated RG 146 certificates. He has a designation of Certified Financial Technician and awarded by the International Federation of Technical Analysts. Tyrone and Thomas have built FX Evolution to one of the best providers of trading education in the country, working with large organisations including the National Bank, Pepperstone Financials, to consult on their clients' educational requirements. FX Evolution's educational arm extends far beyond the popular online courses and weekly webinars. They host a busy trading platform with over 4,200 members and have had more than 62,000 YouTube subscribers to their live market analysis daily channel. You happy with that, guys?
That's all good.
Yeah, that is very good. Thank you for that. That's a very good introduction.
All right, guys. Well, thank you very much for having us, and welcome to, of course, the Price Action Lightning Bolt. I guess seminar, or what we're doing here, and obviously we're going to be talking about the real power of market momentum. Now, Tyra and I are really, really passionate about the idea of understanding the psychology of the market, and a lot of that starts with this principle that we're discussing today. Another big thing that we want to really understand as well is when the market is actually moving in a direction that a lot of people are misinterpreting. So the lightning bolt can help us to always be in the direction of trend, to always be with that momentum. And there are certain things that we look for as well that can really add and enhance the power of the strategy. So obviously, a quick risk warning. It's important to understand that any of the information contained in this video is purely for educational purposes, and the information presented must be considered only general in nature. The information provided does not take into account your specific needs or circumstances, and you must look at your own personal situation and requirements before making any financial decisions and seek independent financial advice if necessary. So what are we going to be covering today? Well, Tyrone, it's almost patented by now, yeah? The lightning bolt itself. We love this strategy. I'm going to give you all the credit. You came up with the name, and it's aptly named once everyone figures out what it is, which is, it's kind of a basic concept, isn't it? But it's so powerful.
It is. It's actually a very basic concept. And look, I'm sure all of you are very well aware of what we're going to be talking about tonight. But I think a lot of traders out there don't really consider how powerful it actually is because, as we all know, as technical analysts, price action is probably the best leading indicator there is. And the lightning bolt gives us so much information basically on all breakouts that we need to know about the momentum where it really is. And we do consider it probably our most powerful indicator. So we're looking forward to talking to you all about that.
Yeah, so then we're going to look at it and how to understand momentum, how to spot and entry plans and exit plans, where to put our stop losses, how we kind of can use it very easily to figure out those areas. And then we'll be doing some technical analysis on the chart. So we'll actually look at a few stocks today. And I've got some examples of the lightning bolt, some examples of some of the little traps and tricks that we like to use it with. And then, of course, if you have questions, feel free to ask them throughout. So Ty, we always talk about understanding what the candles are telling us, and many of you guys would already be well aware of this concept, but the way that we break down candles is maybe something a little bit different to others. Traditionally, you'll look at a candle such as something like this, and people will call it a shooting star, or they'll call it a pin bar reversal, or whatever else they call it. The way we break down things is into percentages, isn't it, Tyrone? And this is a really important factor because we don't really judge it based on the color of what we've set up on the chart. It's all down to the percentages and all down to what is the story of this particular chart on this time frame telling us. So do you want to talk us through that, Ty?
It is, yeah. So look, when we first started out, obviously there's a million types of candle names and all sorts of logic behind why where they work. So what we wanted to do was really take a lot of the guesswork and ambiguity out of the market. So what we did is we developed what we thought were the right percentages of where the basically the entry and the exit of a candle was to really solidify if it was a long-legged doji, if it is a gravestone doji, or if it's a dragonfly doji, if it's a hammer, is it a shooting star? Because the problem with a lot of a technical analysis, I'm sure a lot of you already know, is that there is a lot of ambiguity in a lot of things that you see. And if it's a subjective candle pattern that you're looking at, sometimes you can start to imagine things that aren't actually there. And what we wanted to do is eliminate a lot of the guesswork. So we applied percentage rules to a lot of the most popular candles. So although there are millions of different candle names and structures out there, we've actually developed the only candles that we use, and there's only a handful of them because we think they tell us the most important things we need to know about most market conditions. So we can see here, these are the this is the doji family, of course. So we've isolated the long-legged doji into basically just the 20% range. So although we all know that the market's not a perfect moving mechanism, so we're very rarely going to get the absolute open and close exactly at the same point. But we find that if it's within a range of between the 40 and 60% of the overall range of that particular bar or candle, then we're comfortable that that's really giving us the information that we need to know. We're not so concerned about the color, whether it actually opened higher or lower. If it's within that range, we're quite satisfied that candle is giving us the information that we want. Same with the gravestone doji, of course. We know that's just a really aggressive shooting star. If it is underneath a 20% range of the total movement, we're very satisfied. And of course, the dragonfly doji is a replica of the hammer. And same thing, as long as it's closing within that top 20%, we're comfortable that the price action is telling us exactly what we need to know. Now, with these, with the 9 basically bars that you can see on the charts, we find them, we can basically isolate every market movement into these particular candles or bars. So we know that all of these have a role to play in effectively any market that you can look at. There's not too many different candle structures you're going to see. And I think that when you understand exactly what the buyer and seller momentum is, where the logic is between where it opens and where it closes, it's really all you need to know about price action. And I think it's probably a very underutilized resource. A lot of people probably don't really give price action the respect that it deserves because if anything, the time frame that you're looking at, that particular candle, no matter what time frame you're on, is giving you everything you need to know without any indicators, without anything except what the buyers and sellers are doing. So I think we're very, very strong believers in looking at the price action to lead the way.
Yeah, so price action is the big thing here. And I think some of the underutilized kind of concepts in sometimes technical analysis, specifically things like the long leg doji, which is, of course, an indecision style candle. is recognizing where this indecision is. And this comes into our lightning bolt strategy a little bit later. There's a reason as well that we have shooting stars and hammers, because these also can be misinterpreted, we believe, and they can actually be interpreted a different way to recognize momentum hunts, where basically the market is going in a certain direction or breaking through a zone. And if, let's say, if by example, we had two shooting star style candles and then all of a sudden we see a bullish candle close above those, what in essence that's doing is taking out people's stop losses above here. It's basically hunting those. And when we combine that with the power of a lightning bolt, we've got an example that was very recent in a very major stock on the daily. You get a very aggressive trend breakout. You often get an incredible trade. Now, they don't always happen, but when they happen like this, and like we're going to show you today, they're very, very powerful techniques, and we particularly like them. I find them to be very aggressive, very fast, and they work a lot of the time as well, which is something that we like to do. So we all know about horizontal support. We obviously are very well aware here, I'm sure, that we're looking for certain things to happen in the market, where if we have, let's say, a level, and this level was the psychological level, say it's a stock that's broken through $100 and it's coming back and testing $100, that level could be bounced as previous or as support, which was previous resistance. It's all pretty common stuff. When we recognize a zone like this, it's all good and well to say, okay, well, it's support, I could potentially buy that. But it's a lot more than that, isn't it, Ty? It's really about understanding that, yes, I could just buy this dip or I could just buy this support, but why don't I wait for that little bit of extra confirmation? And this is really where the lightning bolt strategy comes in. So say we're looking at this and it's a daily chart. We might want to buy this dip or we might want to buy this support, but we don't want to be caught in the trap of thinking that it's a support, and then all of a sudden we've all been there and it goes through, we get stopped, we get angry, and then all of a sudden there could be that revenge trade that comes in. So this is where the lightning bolt comes in, isn't it, Ty? Something around these areas can be very, very powerful.
Yeah, most definitely. So what we're essentially talking about, I guess what we probably should explain is what we're talking about when we are talking about the lightning bolt. So effectively, as you probably guessed, we're looking for a series of higher highs and higher lows. All we need is that one pattern, a higher high, higher low sequence, where we got the trough, the peak, the higher trough, and the higher peak. Once we get that break past that first peak, we've got our confirmed lightning bolt. So of course, we're not going to get a lightning bolt pattern on a particular time frame where we're looking at like this. But if this was a daily chart, for instance, what we would be doing is going down to a 4-hour and looking for that lightning bolt off this support level. So we wouldn't be taking the first touch of that, because that's just, it's fraught with danger, as we all know. We don't know if the support's going to hold up this time around. But what we do know for sure is that if the support is going to hold up, at the very, very least, a 1-hour or a 4-hour has to have a lightning bolt on the way up. So we're not all about trying to get every single pip or every single cent out of every single move. All we're wanting is the good meat of that trade. Now, if we are buying off a level of support, we have an expectation that we're going to get a reasonable move up, and that reasonable move up is probably going to test the overhead resistance in the first instance. So what we're looking for essentially is going down to the next time frame and looking for that roll, basically the lightning bolt, as we discussed. We can see here, this is the roll reversal zone. We are actually very, very big on roll reversal zones as well, which is effectively just a support zone that was once resistance, or a resistance zone that was once support. So as you can see here, we've got the resistance previously. It's broken through and it's come back down. Again, even though roll reversal for us is a stronger, it's definitely a stronger medium than just a standard support zone, we still wouldn't take the initial first touch, because we're going to be waiting for that price action to change on the smaller time frame. And as much as it might be a bit more of a patience game in that we're not going to get, we have to be a little bit more patient. We can't just put our pending order there just to buy immediately. And I mean, of course you can. And, a lot of the time you are going to be right in these very strong areas. But for us, we're looking for the proof and the confirmation. And that confirmation is going to come from a momentum swing on a smaller time frame to confirm that level is actually going to hold up. And it is actually quite rare that once this does happen, that support doesn't actually remain intact till at least the first move up to the previous swing. So to us, depending on the time frame, the 1-hour or the 4-hour lightning bolt is crucial. If it's on a daily, we do often gravitate to the 4-hour. 1-hour if we're going a little bit shorter and we really, really want to get in, depending on how badly we want to get into that trade. But for us, probably the time frame down is the one that really confirms it for us, because it's given the market enough time to consider the situation. And I think that's really, really important. Sometimes people go down a little bit too far, and we get it all the time in our rooms. Yeah, well, we saw a lightning bolt on a 5-minute chart, on a daily support zone. Like, really? It's not, you need a little bit more time. Like, we're allowing a 4-hour chart, as we all know, for it to basically do a lightning bolt symbol. We're going to require at least 2 or 3 days of trading to actually make that lightning bolt happen, to get a series of higher peaks and higher troughs. So the market is going to see very, very big markets open and close for at least a couple of days to really confirm that a level is going to hold. So we definitely don't go down to the very small time frames to look for a lightning bolt. We're very specific on the time that we want. So for a daily chart, we'd be looking for a 4-hour and probably 1 hour at the very, very least. And if it was a 4-hour chart that we'd be looking at, then we'd accept a 1 hour a change of trend, or potentially a 15-minute if we're looking for a scalp.
I think one of the other things that traditionally is a big fault in a lot of traders' minds, Ty, is that things can move through. They move through the resistance. We start looking for that conservative pullback, and a lot of people will just pen their order here. Now, sometimes markets will just tank, and they'll do so due to some kind of maybe economic news. It could just be a huge amount of volatility in the markets, and they'll come back, and we call it the falling knife. Obviously, no one wants to catch the falling knife, and these are perfect scenarios where maybe your trading system might be, okay, I see the resistance breakout, I wait for the conservative entry, and I usually put a pending order here. The problem is, if you get a very aggressive sell-off, what's to say this resistance is really going to hold? There is some reason that sold off very aggressively. So if you're just buying those with pending orders and not using maybe something like a lightning bolt in the smaller time frame, you're really doing yourself a bit of a disservice, is the way we look at it, because the falling knife can continue coming through, and all of a sudden it's taking out your stop loss. What the lightning bolt is doing, or being patient is actually doing, is it's not just waiting for that confirmation turnaround, but it's also allowing us to place much better stop loss levels. So if we get this level here, by the time the lightning bolts happen, which is of course a trough, a peak, a higher trough, and then a higher peak, we have the opportunity of placing 2 very good stop losses. 1, underneath this swing here, or 2, the more aggressive stop loss underneath this level. So by being patient, by waiting, rather than possibly having to place our stop loss underneath the last lows over here when we're catching the falling knife, we have a much tighter stop loss, which has got a higher chance of being successful. And then, of course, on top of that, we have a very clear take profit, which might be the previous peak here in this circumstance, or even to leave some on. And one of the things that Tyrone and I talk about a lot with lightning bolt strategies is the ability to scale your position. So you might be able to say, okay, we're going to take our position here, and then we're going to take a portion off at the previous highs and leave a portion on, because we know that if we're seeing this type of strategy, a resistance breakout like this and a pullback conservatively, it's a new trend. There's a trend going on in the higher time frame. So we can have aggressive style stop losses that would be very patient to actually get in. So Ty, that's one of the big powerfuls, isn't it? It allows us to scale. It allows us to have tighter stop losses and also avoid the falling knife problems.
Yep. Most definitely. And look, one of the things that I guess has taught us patience over the years, like we've been doing this for quite a while now, and we require patience in the way we do our setup, because a big part of what we do is actually options trading. Now, with options trading, we use technical analysis. We're very firm believers that it's very, very difficult to trade options without actually being able to apply a technical analysis level with it. So for us, waiting for reversals like the lightning bolt will give us is actually imperative before we place an option position, to make sure that that level is going to hold, because we're placing effectively an option where the stop loss traditionally would be. So although it might sound that you're never going to get into a trade because you're waiting so long for all these lightning bolts, believe me, all the good setups and all the good moves always start from a lightning bolt, and many ones that fail don't. So we have learned that the hard way. Most of the mistakes we've made and most of our learning has actually come from mistakes and errors that we've made. Make no mistake. So we've learned from experience as well as from being taught. And what we've found is patience is always going to be key, even if you are a short-term day trader. Because even if you're a day trader, it doesn't mean that you don't have to look for the lightning bolt. You just go down to the specific time frame that will actually get you in relative to the support and resistance zone that you're actually looking at.
So again, with the short side, it's the exact same thing. We're basically just looking for the lightning bolt, which is in this case, of course, the peak, the trough, the lower peak, and then the lower trough. We would then enter off this position, and then we would also have 2 stop loss levels that we could theoretically place. Now, there's going to be scenarios, and we'll bring it back to the candles here for a second. And there's 2 ways we can play those candles that we just saw. Remember, we saw the long leg doji. We also saw something like the shooting star or the pin bar or dragonfly doji, etc. So if we have these examples, let's say we have a lightning bolt, and on this section here we see this type of candle and it goes back and then it sells through, what this might have been is actually a liquidity hunt to take out this low, this high here, and then it reverses and then it makes a new trough. It's even a stronger trade. So it's about, again, you guys would all agree with this. Everyone pretty much agrees that it's not one technical reason to be in a trade that's usually successful. It's a culmination of bringing 3 to maybe even 4 or 5 separate reasons that are all unique to each other, bringing them together to give you a statistical advantage. So bringing in basic candlestick analysis into your lightning bolts can be also very, very effective in recognizing, okay, this market's doing something very important in this zone. Conversely, if we have a support here and we have a market coming back up and then it creates a long leg doji there as well, and then ends up, completing, let's say, a lightning bolt style strategy. Obviously, this is out of it's a bit big here, but, or even if we have a long leg doji that's formed here before the new low is formed, once the market closes underneath, a long leg doji is an indecision candle. What happens when the market closes underneath that? It's a decision made. And this is where things get really, really interesting. And I'll go over to one of the charts actually. So let's take a look at the charts here and we'll scroll in. We'll have a quick look here at Apple. So this is Apple 4-hour chart and it is back in May into June. And this is what I would call an exceptional setup. Basically, it's a few reasons why it's an exceptional setup. I'll draw one of the major reasons, and that is this heavy line that's come through here from buying pressure. And that may actually also even be reached in the future here with Apple coming down quite weak. But this, I want to really hone in on this particular one, because what we have here is we have a market that's bouncing off our trend line. Now, some people would say, oh, well, you could just buy this trend line and pick it up. And yeah, you could. But again, mostly as a trader, you want to be trying to trade that momentum. You want to be trading the speed. You want to be trading the aggressive move. And ideally, as Tyrone mentioned, if you're trading options, it's all about being able to predict that there's a nice amount of movement. So you could maybe place a spread at a higher point. So let's say your target was up here, resistance over on the left-hand side on Apple, and your target was over here. We have here a trough into a peak, into a higher trough, and then a breakthrough of this 128. Now, the reason I love this so much is not only is it an incredible resistance level, but it also has all the signs of a massive momentum shift. We have a shooting star style candle, another rejection style candle, and then we get a closure above that 128, which knocks these out. And when it gets through here and we get that effectively lightning bolt style strategy, we've not only broken through resistance, which allows us to potentially look for role reversal, plus also start scaling into our position, but we've taken out a lot of shorters that were here. So people that were traditionally looking at these candles as weakness, they would be getting basically smashed. Their stop loss would be getting hit. They would be pushing their stop loss out and pushing it up. And this is a massive momentum shift. So it's easy in hindsight, but of course, I always look for this particular style. When I'm looking for lightning bolts or I'm looking for any of these types of candle setups, if I ever see rejection style candles and then a bullish move above them, the move is generally explosive and it lends itself very well to well-timed options, doesn't it, Ty?
It does, most definitely. And I think probably one of the biggest things we learned, and we learned it fairly early on actually, is that all the power of candles actually really lies with where they actually end up on the chart. So, and what I mean by that is like a long-legged doji or a shooting star or a hammer candle in the middle of nowhere is effectively a nothing candle. It makes no difference whether it's you could give whatever fancy name you want. If it's in the middle of nowhere, it's not going to really give you, it gives you information, but it's not going to give you information that you can actually act on. Whereas when you're getting the right candle setups in the right places, and by that I mean good support zones zones, good resistance zones, a break of a lightning bolt. That's where you really want these candles to appear, because that's where they actually mean something. It's the same with engulfing candles. I mean, a lot of the technical analyst knockers will say, oh, if you took every single bullish engulfing candle setup, you're going to lose more than you're going to win. Well, you know what? You probably will. But if you took every bullish engulfing setup at a level of support, you're going to be well in front. So that's the difference. It's like you really only should take the candle setups that actually complement the setup that we're looking at. That's why we said when we're looking for reasons to buy, we're not looking for just one. We're never going to buy on just an engulfing candle. That's only just part of the puzzle. We're going to be wanting the momentum in our favor. We're going to be wanting the pullback. We're not going to talk about indicators tonight, of course, but we're going to look at those key indicators, things like the 20 moving average, all the things that we look for to complement and build the case for that trade. So probably the biggest lesson that we learned, I think, that really advanced us forward, was to only take notice of candles that actually meant something in a particular place of importance. And those places right there, as we can see, like you can see, it's trying to break a resistance zone. You've got rejection, rejection, rejection. They're all trying to break it down. Everybody wants to short Apple there. They're obviously very, very important at that zone. And then when the breakthrough did happen, the confirmation did kill all those candles off. All those stops were taken out, and then off she went.
And it was a very aggressive move. And there's a few other things that we can bring in that maybe a nuance to this particular stock. Apple is heavily traded by retail traders. At this point in time, we have never seen, I think ever, as much excitement from the retail side and as much actual trading going on from the retail side as the last 12 months because of the pandemic, because of course crashes bring in retail. And this is even higher now, I believe, in options transactions as well than the I think it's the .com boom. So it's very, very high numbers. If we have a heavily retail traded stock, many retail traders would have been trapped in here. Now, we won't talk about the option side of things tonight, but really one of the things that I like to look at as well is how many options contracts are closed or open to the negative side here. Because if there's a huge amount of weekly options, and I bet you there was based on these candles, there would have been a lot of negative, like a lot of puts open by retail. And of course, what does Wall Street like to do, or the bigger market makers? They prefer to expire a lot of these contracts worthless. So there's going to be a lot of things that we can hone in together with our basic, literally very basic trading pattern here, which is the lightning bolt. And if we had something like a long leg doji as well at this 128, same kind of idea. If it closed above there, decision made, let's go bullish. Absolutely, we're not going to take a short. And the best thing about being bullish on a stock like this is we all know that when it comes to the idea of the stock market is generally a quality stock will go up over time. I mean, that's an index will generally go up over time. So it is slightly biased towards the bull side versus bear. It's much harder being a bear than a bull. You'll see the aggression that ends up happening. Now, you may not have been able to predict that entire aggression. There was a moving average that sits behind it. I can tell you that's for sure because I remember it. But this particular thing, what you're looking for here is we're nimble, we're fast. We're looking for a buy. We're looking for a profit, and what happens after that is usually inconsequential to a trader. They don't care too much. An investor will be like, okay, let's hold it in.
But I think, the magical thing about what we consider the lightning bolt is the multiple entries and scaling in that it gives you. Like on a stock like that, yes, it gave us the initial entry, no question about that. And then we were long. But if you came along and saw it after that move, basically every time it did a lightning bolt, it was effectively confirming that the momentum was still actually key. So realistically, every lightning bolt that forms after the first one is effectively just confirming that the momentum is still strong. And what we find, we often like the 2 steps forward, 1 step back approach. We don't like big pullbacks. So our lightning bolts, we like them. We're a little bit fussy, right? Like you can probably see we're pretty fussy on the trades that we want. But and that's for a reason, because realistically, we all know that we don't have to trade 1 million times a week to actually be a profitable trader. We only have to get the quality entries and we have to get the quality setups. And weeding out the bad trades is actually a trading strategy in itself, I find. The less bad trades that you can trade and take, the more profitable your good ones are going to be, because you don't have to catch up on the bad ones. So to us, patience is key, but momentum and following the momentum on a trend that is actually moving is actually a very, very big plus.
Yeah, And that's the one thing that we get a really good opportunity to do in stocks, sometimes even more than the currency world. And obviously this concept will work in both the currency and the stock world. It's just that in the stocks, you should be usually a bit more biased towards the buy side, at least we believe, because over time it tends to gravitate towards there. So look, Ty, obviously we like the lightning bolt a lot. It's not just as simple though as just being able to say, okay, I'm looking for this. I'm just looking for a trough, a peak, a higher trough, and a high peak. That's all that we really, are looking for. But again, if it was that simple, you could put a robot on it. Anyone can do it. Everyone be able to see it. It's that nuance of bringing in that second step, or those 2 to 3 or 3 to 4 different reasons, finding the candlesticks. And as I specifically said before, say in this scenario here, let's say we had a market moving up, a market pulled back, we had all these rejection candles here, and then it had broken past those with a bullish close. It's a very, very aggressive trend after that, because what happens is it takes out all those stop losses. It's clearly been showing signs of weakness, and then something has changed it, whether that be news, we don't care because we're TA traders, or whether that be just pure market momentum, we again don't really care. We're just going to trade it and recognize it for what it is. I often do notice that when these occur, you'll see an increase of spike in volume as well, which is consistent with, of course, a bullish market or a bearish market in the move. So I would use volume if you could in stocks. It does help out on these particular styles of and strategies. So yeah, we'll go back into the slides here for a second, and we'll get back into the price action in just a few moments. But recognizing price action is obviously the best thing we can do. Following trends, this always keeps us in following at least that time frame's trend. And often when we use the role reversal strategy, we can follow the trend within the trend, which again helps us. They don't say trend is your friend for no reason. And we've all been there. I know I started countering. I'll put my hand up first and say my first trades were all counter trades. I thought I was like mean reversion. Let's go. I wanted the best price. And Ty, I think you were kind of similar. Yeah.
I think everybody starts out that way. I think everybody is a little bit trigger happy, and counter trending seems to get that quick result that people are always after. I think there's a lot of instant gratification when people first start trading. So I think people just really gravitate to that sort of fast and quick action. But realistically, that's not the way to go. I think people who have been around long enough to know, when you counter trend, there are two things that are going to happen. Yes, you are going to get faster results, but you also have to be a lot sharper on your entries and your exits, or the market will punish you. So if you are a very good trader and you've got the time to actually invest into actually really being on top of the charts and watching what's going on, well, of course you can counter trend. But realistically, it does require a lot more work. And what we've learned, from a long time ago now, is when we first started, we were spending between 15 and 18 hours a day in front of the charts, thinking that we were trying to master something that we really, really wanted to master. But what all it was doing was causing us to take trades that we shouldn't have been doing. And then we quickly learned that this is no lifestyle that we actually want. I think I'd rather work a 9-to-5 day than sit there for 18 hours a day looking at the charts. So in that respect, if you're going to be a slightly longer term trader, you're going to have to require a longer term strategy. And that, of course, is following the trend, because you're going to get a lot more ease of entry, because the market's a lot more forgiving if you're trading in the direction of the trend. You don't have to be as sharp on your entry. And of course, you don't have to be as sharp on your exit, which is just as important before a market reverses on you.
So obviously role reversals in action here, Ty. The reason we have this slide up is because as we're selling off, and we go back to this previous support, which acts as resistance, everyone would use a similar concept to this. There will be lightning bolts on the smaller timeframes here. So remember, we're not clarifying what time frame this is. Could be daily, could be 4 hour, could be 1 hour. You might go down 1 to 2 timeframes. And what you'll notice is that even though it looks like it's just selling off aggressively, as we know, the story on this, let's say it's a daily, and the story on a 1 hour, the 1 hour could still look very much like that. So each time this happens and each time it comes back, we're looking for a story within the candlesticks. And that story is going to be here. We've got, of course, what looks like a little bit of a shooting star style, pin bar rejection. That might be along with the fact that we've got, down, a little bit of a pickup and then support through. This could be a trigger point where you start to sell into the lows. Over here, the story underneath the time frame could have been a lightning bolt on the smaller time frame. Over here, very similar type of thing could be occurring. So we're looking for that reason to get in, and it helps us to not get trapped with this idea of, oh, well, this is support, this must act as resistance, I'm going to take that short. How many times again have you been probably hurt where you've thought that and then it keeps going, closes above, and all of a sudden it's over here? Look at the pound US dollar or euro US dollar recently. Big reversals off what was a phenomenal trading week last week. They hit supports and now they've gone back and they're at this massive roll reversal. But every time you were trying to short it through, it would have been punishing you because all the smaller time frames are lightning bolting up. So yeah.
And I think that example there is probably as good as trading gets, really. Like when you're getting a downtrend that is effectively touching the basis of the support and resistance as that was, that is pretty much as good as trends can get, and it makes it almost impossible to actually screw it up, really, doesn't it? When you look at it like that, if you're waiting for that momentum, in actual effect, your chances of actually getting that right are extraordinarily high, and that's what we're looking for. We're looking at putting the advantage, of course, in our favor, but using not just using our market nous, if you like, to try and predict what's going to happen. We're using fact, and the fact is price action is king. So realistically, we put that at the forefront of all the trades that we place. And although we use other indicators to help us determine those levels, price action is always king in our eyes.
This is just an example that I've taken from our Discord community and something I posted earlier in the year. And we can all recognize this and what it looks like, which is obviously a flag style pattern. And it's a really big pole that's then coming down and effectively creating its own lightning bolt with a resistance breakout. But there is a story in here, and I wanted to bring it up for the candlesticks. And that is that we've again got a bunch of reversal candles around this level. Let's call it just underneath 1300. Must have been about 1280. We have rejections, all look bad. It does go bearish for a little bit, and then it snaps all of them off with this high momentum, massive candle. And I'll show you the end. This is the end of what that looks like. So this is literally the flag and the lightning bolt. It breaks through and you can see that momentum. Now, we all know it's a momentum style trade, but at the same time, I think what makes this a lot better is the fact that there was clearly some heavy selling here. Again, manipulation, I believe, against the retail trader is at an all-time peak. And specifically, they are looking heavily at pin bars or hammers and shooting stars as signals to go long or to go short. So I'm a big fan of using them and long leg doji candles. They're super simple candles, but when you see closures above them, I've found that especially over the last 18 months, they've been incredibly aggressive. And I've done a lot of live streams. As Larry said before, I live stream every single night of the week on YouTube, and I see it all the time. It has happened on so many retail specific stocks, and Shop is no different. This is Shopify. We've probably used the platform a few times. They're almost all of us by now. And it's another one of those ones that we look for. So great take profit target. You don't get greedy. After this, it becomes impossible to read. If I remember rightly, the chart got crazy. But that's all we're looking for anyway. We're taking that $1,300 plus closure. We're getting aggressive, and we're obviously hopefully taking profit at this zone.
Yeah, I think that brings up another good point actually about the lightning bolts that another reason why we, aside from all of the good things they give us in terms of momentum, that actually a lot of very, very popular patterns actually do start out with a lightning bolt to actually break them in the first place. So when we're talking about if we're talking about say a head and shoulders pattern, for a head and shoulders pattern to actually work out, it must actually lightning bolt, and that's just because of the pattern itself. I mean, you've got the head, you've got the I think Thomas is struggling to keep up. I might have just jumped the gun a bit on the slide.
You jumped on my slides, but that's all right.
Sorry about that.
I do have it later, but that's okay. So we've got the trough, we've got the peak, we've got the higher trough. And then, of course.
Yeah. So an inverse head and shoulders is effectively, for it to actually break the neckline and confirm the pattern, it has to actually lightning bolt out of the pattern. There's no way the inverse head and shoulders can actually work without the lightning bolt. And it's the same for double tops and double bottoms. It's the same for a lot of the popular patterns. So realistically, it's a self-fulfilling prophecy anyway. But we all know this. I think it's probably just more highlighting the fact that it's actually happening. So we actually start looking for it in our trading.
Yeah. So look, we mentioned before, and Tyrone jumped on me on the patterns, but almost all patterns kind of are realistically creating these bolts. It's not, we call it this, it's just a simplification of it, but it's again bringing together this with everything else. I found that reading the story in the charts and thinking about each candle as basically a war zone between the bulls and the bears changed my entire vision on the market. And I started to really, I would say my favorite candle right now would be the long leg doji.
You do talk about the long leg doji.
I love the long leg doji. I rant about the long leg doji time because the thing for me is that it so often happens at, guess what, a key point of support or a key point of resistance. Of course it will. It's indecision. But when you get that closure above or below it, specifically, let's say we have a resistance and we have the long leg doji here and possibly even got the lightning bolt coming into it, when that decision is made, because of the speed, the algorithms in the market, the robotics, the retail FOMO, everything else, the power of the move is really fast, specifically to the bull side in the stock market. And I've streamed a lot. I've seen it be very, very profitable for many people over the last 12 to 18 months. So it's one of those things that I think cannot be, discounted. And while there's heaps of other methods, I'm a big fan, aren't I?
You are a big fan, most definitely. So that brings us on to our pressing system. Is this the first slide, or did I make you jump a little bit too far ahead?
You made me jump quite a lot.
Okay, maybe we just go back to the pressing system, because I think it's a very important part of what we do. So what we did when we first started, I guess educating, what we actually started doing first was actually educating the clients that we had. So we had clients entrust us with their investments to manage it for them. And what we like to do, we run a very transparent operation where we like the people who we're actually investing for to understand why and what, and basically everything that we do, we want them to understand why we're doing it. So it's not like we're not throwing darts at the wall. There's a reason why we do everything. So what we did, we started working on a bit of education for our clients, and that turned into, well, then we could probably educate our staff, and then all of a sudden we started getting interest and people started wanting to learn from us. So what we did to really help that learning across, we really needed to paint the story that we've been talking about. And we designed basically a system called Pressic, which is basically from the ground up, which is the first foundation modules of our main Ultimate Masterclass. So every one of them has a very, very important role to play in effectively every trade that we place on a daily basis. And the reason for that is because we allocate a certain amount of points and I guess goodness to every part of the Pressic system. Now, the first one, they aren't technically in an order that is I guess favorable. They could be in any order, but I like price action as the number one priority. So I put the P first, and Pressic kind of had a cool ring to it. So I kind of made it sound like it needed to be sounded. But in my mind, these are the orders that need to be adhered to actually get the best outcome for your trade. Now, price action, like we've just talked about, price action, we're talking about the lightning bolt, right? So higher high, higher low, lower high, lower low. It's everything to us. If that was the only thing that we could use for the rest of our days to trade, we would be perfectly fine with that, because we get enough information from that with the candlesticks around them that are going to give us the information we need. So price action and candlesticks and the basically the basic drivers are for the first momentum move. The second most important thing is risk management. You might say that would be probably one of the most important things. A lot of people probably would agree that it might be one of the most important things, because it doesn't matter how good a trader you are, if you haven't got risk management in place, you're bound to fail at some point. But in order for us to be able to place trades properly, of course, risk management has to be at the forefront of every trade that we place. The ELD 363 system, that is another system that we designed. Basically, we're not going to go too far into that tonight, because that's a webinar in itself. But realistically, what that is a multi-time frame system that we allocate that gives us the guide for which time frames we should be looking at to basically pick the right movement. So ELD stands for the entry, the location, and the directional time frame. So the first time frame we're looking at is the entry time frame. That might be the 1 hour. The L is the location time frame. That would be, in this case, the 4 hour. And the directional time frame will be the daily chart. So they're the three time frames that we're looking at. Now, the 363 is basically what we need for those time frames to be relevant. Like I said earlier, if you're looking at a daily trend, it's no point looking at a 5-minute lightning bolt. It's not going to do any good whatsoever. If we're looking at, say, for instance, if we find a location pattern for a flag on a daily chart, our directional time frame is going to be the weekly, and our entry time frame is going to be the 4 hour. The 363 basically explains how many candles need to fit inside the original candle to make sure that the time frames are relevant to the location. So in that regard, if we were using the daily as the location, we know that we've only got 5 candles that go into a weekly chart, and we've only got 6 4-hour candles that go into a daily chart. So we know that those 3 work together. They're inside the 363. That's what the numbers stand for. But as you can see, like I explained, we've got the ELD, the letter, the C in Presic is basically for chart patterns. That refers to all of the great patterns that we don't. I know there are millions of patterns out there as well. We've really located our favorite patterns. The only ones we use are the ones that we believe work in the right context of what we're trying to achieve. So double tops, double bottoms, inverse head and shoulders, flags and triangles. That effectively sums up all of our chart patterns that we look for. The letter I in Presic is indicators. Now, indicators, again, is a funny thing. So we know that there are literally millions out there. We're never going to say that some don't work and some do work. I'm sure all of them work in their own right. And if people can apply them however they choose, and they're going to have systems that work. For us, we only use indicators that we know complement each other. So a lot of people, we do a lot of mentoring, of course. And, some of the first things we spot that are a real problem is they'll have a screen on and they'll have so many indicators on their chart that you can't even see price action. Like they've literally got like 15 or 16 different indicators. And the irony of all that is, 3 or 4 of those indicators are probably telling you the same thing. So we're very, very conscious. We know what indicators we want to use. We love moving averages. We love Bollinger Bands because it's giving us the volatility. We love MACD. It's one of our favorite indicators because it's giving us momentum shifts. We love stochastic. They're the things that we bring together. We make sure that the indicators that we're looking for complement what we're trying to achieve. But most importantly, we understand exactly what that indicator does. There's no point just looking at lines on a chart. You need to 100% understand exactly what that indicator is trying to tell you so you know it's giving you the right signals. And of course, the last C in Presic is charting technique. So we're talking about things like Fibonacci. We're talking about channels, descending, ascending. And our Presic system, once you input all of the information, it effectively gives you a score. So it calculates all of the information that you've given it, and it gives you a... We don't trade anything under a 4-star trade. So if we don't get a score of at least 200, we don't take that trade. And that score is based on all of the information that you're giving it, based on all of those 5 very key information. So here's a little bit of a rough guide as to how it works. You can see that we've got...
Those scores are wrong though, but it's just that idea of basically you've got all these different ones.
Yeah, so this is just the basic idea for the thing. Yep. The system itself actually calculates its own scores depending on the strength of the trend. But you can see each of these letters in action. You can see the things that we're looking for in each of them. And as you go through it, to us, this is a trading blueprint. Okay, so when we're looking for a trade, if we're forcing somebody to do all the right things, and that's effectively putting the boot on everybody's foot, whether it's the buyer or the seller, we're basically forcing people to follow a business plan, if you like. So they have to go through all of these 5 steps before they actually place a trade. And if they get a 5-star or a 4-star, then it's all good. You've got a pretty solid plan. Anything under that, and it could be a little bit suspect. So we definitely like people to stick to those rules. So that is how the Presic system works. But it's a very, very powerful concept, and it might seem simple. And I know, a lot of you in here are probably very well educated in technical analysis, and you're probably seeing some of this as fairly simple. And you know what, for the most part, most of it is. But I think it's actually the combination of what is effectively simple concepts that actually makes trading work. And that's what we've certainly found with a lot of research and a lot of trading, that it's actually bringing simple elements together, which is what makes the big picture work. And it's served us very, very well. So that's why we love our lightning bolt so much, because it is effectively the start of what we're trying to achieve.
Yeah, so I think like whether you look at any of these stocks here, I mean, we could go through lots of different stocks and have a look at totally different systems of how they've come out. So something like a Netflix right now, if we look at a Netflix, we'll know that it was in a giant, channel, and then it's obviously broken, and it's basically just completed a real test at trying to get a closure above this high. Now, in essence, it's doing little lightning bolts within lightning bolts within lightning bolts on the time frames. But what I guess we're getting at is that we realized at probably a little bit too late that the way that we wanted to actually trade, or the way that we wanted to look at systems and look at stocks and everything we did, was we wanted to follow trends. We wanted to make sure that we had a business plan that would always get us to follow those trends. And then on top of that, we weren't trying to find the value plays all the time, where we were buying dips or we were buying big pullbacks in stocks, where we thought, oh yes, this stock has got 50% value in it because it came from this peak, and that's what we're going for from an investment plan. What we found was actually following the momentum and following the stronger patterns, even when the market started recovering again. Like right now, obviously, we're in a little bit of a dive in the NASDAQ and S&P. That we found that the actual elasticity of the move that had already been going quite strong came out very, very strong, and they actually moved a lot more aggressively. And I'd be interested to know what you guys think about that. But yeah, that's what I've found. I usually find following those trending based stocks has been a lot better buying strategy when we have these small corrections, and lightning bolts have been able to get us into quite a few of those positions over time, including things like US oil as well.
The US oil was a technical analysis bonanza basically for the start of 2021. Gold was the same for quite a while there. Like we just got entry upon entry upon entry, just following our basic rules really. Because like to us, we consider what we do very, very basic actually. I know, you can have all the qualifications in the world, but at the end of the day, trading is actually quite a simple process if you can actually follow the rules. And if you're only isolating the quality trades, it becomes even more simplistic in a sense, because actually trading the complex stuff and trying to find trades that aren't there is actually the hard part of trading, in my opinion. But I think if you're looking for the easy trades, most of the time they present themselves. I mean, we've got oil here. Oil was just opportunity after opportunity. Like it was technical analysis, role reversals, breakouts, lightning bolts, hitting targets like they were, like it was like a yo-yo. It was almost like the market was on a yo-yo there for a while. And you can see there, like look at that, like that was right there. You can see the break of that resistance zone. It gave you two entries. I mean, even at you had the break of that trend line. It came back and touched the role reversal zone from above. If you missed that one, it came back and did it again for you. Then it gave you the big rejection candle as well, and then off it went again, straight into the previous target. Like you knew where you were going. It was a pretty easy. I mean, even if you didn't get the very big peak, like not many people carried it to 77, but by golly, you would have been taking your take profit at 76. But that's where the previous resistance is. So it's not all that hard when you're actually when you know what you're looking for. And I think that when you're applying the momentum shifts out of these consolidation zones, it gets you not so much worrying about the entry, because I think the entry takes care of itself, but you start paying a little bit more attention to the exit, which can be just as important. Otherwise, you give away quite a bit of momentum and obviously quite a bit of profit. So the lightning bolt works both ways. I mean, if you're looking for an exit and you're not really sure about whether it's actually going to exit at a particular resistance zone, well, guess what? You can just jump straight into the smaller time frames and look for that reversal of a lightning bolt on the way down. If you get that on a meaningful time frame, like a 4 hour, and it's a daily chart you're following, I'm getting the hell out of that trade, because you know that a lightning bolt on a 4 hour is probably going to signal a pullback that you're not going to be comfortable with.
So here's just an example, Ty. I might as well go with the real market right now. And I just know this is in what I call like a recovery. So you'll notice that with that oil trade, we had actually a massive inverse head and shoulders, a huge resistance line, a downward trend line that all got broken at the same point, which led to a pretty big bonanza recently in buys. And this Boeing kind of reminds me of that in some ways. I mean, Boeing basically is a hated stock and it's not doing very well. It's got this massive trend line down on it. And we've had a pickup in momentum. Usually I'd like to see that accompanied by volume on something like the daily. So we would look for volume here, which has been it had that random day of kind of higher volume. And what we're looking for now is a breakout to start what we call the first line of repair. And this usually is coupled by effectively a form of lightning bolt where it goes through this zone and we get very clear take profits. As Ty was mentioning before, it's all about being able to say, okay, well, if we get involved in this momentum, where our take profits? Well, 240 here makes sense, and 250 key psychological zones. So yeah, we like to bring together, again, 3 to 4 separate reasons. The lightning bolt's only one of them. The understanding of the candles is another one. I could go through a lot of charts and find a whole bunch of different scenarios, but I like to see usually around here, my perfect scenario here would be to get a long leg doji or a rejection style pin bar right here. And we've seen these happen a lot. Then we get a bullish close above it. And to me, that would be a momentum style play that would be going through the repair downward trend line. It's a very easy one to spot. I'm sure many people on Wall Street will be looking at this. And we've also seen a strange repair going on this stock while the rest of the market's getting hurt quite badly. Boeing is basically staying relatively stagnant. So if it does get through, there could be some really nice momentum there.
Maybe we should look at something a little bit close to home, and maybe we'll look at the ASX 200 for a second, because that gave us actually some very good technicals on what we've been talking about today, really. Now, I know we're going into some live markets, so we must emphasize very, very strongly that this is only general advice. Okay, so even though we're looking at live markets, this is actually for education purposes only. So we must say that we do a lot of this, so we need to make sure that we actually cover that. I know that all of you are well aware of this, but look, this has just been a very, very slow burn, even from the standpoint that it was reaching all-time highs. Like we all know that. We know that we've been in a market that has been very, very bullish for a very long time. And now for whatever reasons, people wanted to sell this down, be it the closing of the economy, all of the things that are going on in the world that aren't, basically representing a market that should be at all-time highs. We always refer to price action. And that's the thing, I think, it's not that we don't use fundamental analysis at all, but we always refer back to technical analysis, because at the end of the day, we can only trade what we see. So although we had markets that were, shooting up, we have to be able to trade both ways. Otherwise, we were going to be waiting for a very long time, even though the short was eventually coming. But I think that break of that channel was just a real highlight for me. I think the second touch of the trend line there, you knew you had a roll reversal zone. It was just it was just beautiful. It was beautiful to watch. It was beautiful to trade. And the good thing is, it wasn't like, I know people say another big knock on technical analysis, which we definitely don't agree with. And we do a webinar every single Wednesday night in the live markets that dispels any of the myths that people have that technical analysis is a hindsight tradition, that it's easy to see in the hindsight, but you can't actually predict it. We actually see these things unfolding all the time, and we talk about them live. And then lo and behold, the week after, you can actually see them play out. So yeah, we know that it's only a myth, but I think that even if you missed your initial opportunities on a trade like the ASX 200, it just gave you so many different entry points, just following the same basic rules. The roll reversal zone on a lightning bolt move is such a powerful move, and you can go to all different time frames, many, you can go to 4 hours, 8 hours daily. Most of them gave you a lightning bolt in one way, shape or form, especially when you know that you're at a point of very, very heavy resistance, because it is at an all-time high. And just as importantly, or definitely importantly to us, we're at a very seasonally weak period as well. Okay, so we know, September and October are generally very, very weak months. September in particular is proven to be the weakest month of the year over many, many years of data. So not only do we have seasonals on our side, we've got market highs on our side, but then when the technicals start to play out, you've got technicals on your side as well. So I think it made it a very easy trade.
Yeah, and I think there's also more potential here, Ty. I mean, basically things like this is a key support that we've hit a few times now. Obviously, we come down. We have here rejection candle. We have an indecision candle. We have a rejection candle. We have a rejection candle, rejection candle. These are all telling us a story that this is a serious point. Now, if we close below that point, come back to the conservative, what would this be? Previous support becomes resistance. We then start to dial into the smaller time frame and look for the lightning bolt. Now, that might be as small as this is an 8 hour chart. You might be going down to a 1 hour chart or a 15-minute chart to look for that change of trend. But they're very, very powerful in the right area. And the story would be incredibly compelling towards the shorts if we got underneath, because of the indecision candle, the rejection candles, I always think about that story on the left-hand side helping us on the right. And I never thought about it that way until it just clicked one day and I went, wow, it's all about understanding the real psychology of how big a zone is this breakout really going to be.
Yeah, and I think that probably waiting for the technicals like we've talked about tonight and waiting for that lightning bolt momentum shift is especially important in a market where you have a bit of a bias. Now, I know everybody has a bias at some point. Like even if you say you don't, you probably will. You probably do secretly, right? Like everybody knows where they want a market to go. So it's very rare that somebody would have a bias or an unbiased view and actually trade it every single time. But the problem with actually not being patient and waiting for that momentum shift on a serious time frame is that you can be, tricked into thinking that a market's going to do something that it's not. So, and I've got to say, I mean, even from a personal standpoint, the ASX 200 towards the end of September or sort of even mid-September was actually starting to get a little bit frustrating because we were expecting it to fall. There's no question about that. We were looking for the fall. We were just waiting and waiting and waiting. And towards the end, it was going to be like, is this September sell-off ever going to happen? And there were many times where we could have been nearly tricked into actually trying to short it prematurely, mainly because of our bias. But it wasn't until we actually waited for the real signal that's when it really came. And when it really came, it gave us everything that we wanted and more. But luckily, we were able to be patient with it because, obviously the ASX 200 is a very big part of what we do. And we weren't tricked or I guess, given a false hope that it was going to fall just because it hit a level or just because it was, the 10th of September when it's supposed to fall. We waited for the technical to happen. And I think that was vitally important. And learning that has probably been a big, big key to, really helping us evolve as traders. And it's taken a long time. But we believe we've got to a level now where we definitely understand the market a hell of a lot more than we did 10 years ago. We can assure you of that.
Yeah, for sure. Another one would be things like, the recent move on Bitcoin. Now, a lot of you might not prefer Bitcoin or may not trade it, but realistically, it's becoming a bit technical. I would say something like this breakout here, but above 44,000 is another one that's a classic case for us. You got the trough or you got the low, you got the peak, you got the higher trough or the higher low, and then you break through. And then when that happens, it really triggers a huge amount of momentum. And what you'll notice is when you go through the smaller time frames, you look at a lot of the altcoins as well. They all have a very similar style scenario, rejection style candle stories where weakness has been found. And then all of a sudden you snap that weakness with a big bullish candle and it creates a very huge momentum shift. And the volume was massive. And this just happened the other day. And since then, it's been very, very good. And we know, being TA, experts here, that this is an amazing support. I mean, the story here on the daily was relatively compelling. And then you basically had an engulf, a rejection wick, a rejection wick. We get weakness. Surely, I would not want to buy it there personally. I mean, I think that's dangerous buy. But then we also snap what was looking like a very bad rejection candle. And all of this is happening on the top down. So we go from the top and then we go down to the 4 hour and the 2 hour. And the story on the 2 hour and the 4 hour is so compelling towards the bull side here. We're seeing that turnaround. We're seeing that lightning bolt coming through. And it's just a very compelling buy. And we don't often get them, but it could be the pound US dollar. It could be the euro. It could be Apple. It could be BHP. It could be ANZ. It really doesn't matter. It's a very similar concept.
Yeah, and I think it is probably one of the favorite things we absolutely love about technical analysis. Although there is a lot of information to absorb to really understand it, when you do understand it, you can effectively apply it to whatever instrument you want. I mean, at the end of the day, if there's a buy and or if there's an open and a close and a high and a low, it's a tradable instrument. It's made a candle or a bar. And if you've got those 4 pieces of information, you can effectively trade whatever instrument you want. If only the racing industry had open closes and high and lows, we'd be able to master that as well. But effectively, it's about the only thing you can't apply technical analysis to, because everything else you literally can. So I think although there is a lot of information to absorb, the learning curve isn't as steep as people think, because you can actually apply it to multiple instruments in the exact same way, because price action is price action.
I just want to talk about invalidated ones, Ty, or something where you don't want to be just randomly buying for the sake of it and thinking it's lightning bolt. This is Baba. A few people have been stuck in this Alibaba's very, very bad downtrend at the moment due to the, obviously concerns on the government. And you get a bit of a base here at 160. Very valid that the 160 could be a support. Very bad downtrend though. And what happens is it looks like it could be breaking above, but it actually doesn't confirm with a close. It obviously gaps above and then sells off. For me and for Tyrone, this is not, and I'm sure you guys, this is not a closure. This is not a proof to take that position long. So it's about the close confirmation. And we would all agree with this. It's, if you don't wait for the confirmation, you will get punished. You'll get a ton of fake signals on the lightning bolt, on breaks of key resistance and breaks of key support, on any of these types of things. It unfortunately, you'll miss out sometimes as well, where the market will break through. And that's where I think scaling comes into it. If it's in a downtrend especially, we better be waiting for the confirmation more so than anything else. In fact, in the downtrend, I would never take a position without waiting for the confirmation. If you're in an uptrend on the lightning bolt, which it certainly wasn't, but if you were, you might scale a portion in here, maybe a third of the position, a third on the confirmation, and then a third on maybe a higher time frame confirmation. And that was a big game changer for us. The lightning bolt allows us to practice potential scale opportunities. It helps us have a counter trend scenario versus a trend scenario, and to be able to recognize maybe when a trend is reversing. So right now, this particular stock, I mean, who knows where it really goes? Does it go as low as down here at the 130? Some people are calling that. It means, I guess a lot of us would probably think that's the most likely next target. But yeah, I mean, we will not be picking up this thing, even if we like it, until it hits here and makes a double bottom, or makes a lightning bolt style strategy, or makes a inverse head and shoulders. All these patterns are what we're looking for at these levels.
And all of them equal a lightning bolt. And that's probably the major point of it. So the last thing we'll talk about with lightning bolts is actually the depth of them. So we do apply a scale to our lightning bolts as well. So we don't just look at the market and say, all right, we've got peaks and troughs and everything's all good. What we like to use to actually measure our lightning bolts is actually very common Fibonacci retracements. Okay, so for us, the only Fibonacci retracements numbers that we ideally, in our perfect world, a 38.2 or a 50 pullback is all we're looking for. A 61.8, although I know it's the golden ratio and all of the fancy stuff that goes with it, to us that pullback is a little bit deeper than we would like, and a reasonable amount of momentum has been lost to get down that far, but we would accept it. But what we don't accept is a lightning bolt that goes any further than 61.8. Our preference is definitely a 38.2 or a 50 at probably the favorite end. That's where we want to see the lightning bolt really turn around, because that means that it hasn't lost enough momentum. What a lot of people don't realize with Fibonacci retracements, I mean, I see people going to some people think the 78.6 is the best pullback. I mean, are you kidding me? Like, that's actually lost so much momentum.
So maybe it's stop hunt.
it's nearly returned back to where it started. And you got to remember that, like, what we're looking for here is momentum, right? So what we don't want to lose in a momentum trade is actually too much momentum the other way. So we're looking for a pullback on the lightning bolt to around that 30, the 38 or the 50, which is ideal. 38 is my favorite. If we can get a 38 and it goes from there, happy days. 50 is acceptable. 61.8 if the pattern's very, very strong. But any further than that, and to us, that really weakens that lightning bolt to a point where, that's just a little bit too deep. And it goes the same way on the way down, of course. So those levels are really, really important to us, because it means it's very, because we treat them as a momentum play, it's very important for us that momentum is actually continued, right? Like, it's no point if it's doing that, and then it turns around at a good level, we're comfortable. But if it goes down all the way to 78.6, look at all of those points of resistance it has to break on the way up now. Like, every time it does a swing low, it's effectively making a new resistance point that it has to break past on the way up. So it stands to reason that the further it goes down, the more resistance or little mini resistance points it's going to have on the way up, which is actually making it harder for the momentum. It's effectively reversing what you're trying to achieve in the first place, which is actually having a pure momentum play with not a lot of traffic in front of it. So I think it's really, really important to apply that scale. And again, the 38 and the 50 fib. Look, I think in a way, we very rarely draw Fibonacci retracements, because at the end of the day, we know it's only a percentage, right? So what we're looking for is effectively a percentage move back. And what we're looking for, the 2 steps forward, 1 step back, is our favorite approach. And that's why the 38.2 resonates so well with us, because it does resonate with a 2 steps forward, 1 step back approach, which really gives us the momentum that we're wanting out of a move, aside from the fact that it actually breaks down a lot of the patterns. especially support and resistance, when it's getting a neckline broken on a inverse head and shoulders or a head and shoulders the other way, it gives us all the information that we need. And if it's actually being backed up by a Fibonacci retracement that's confirming that momentum, it just makes that lightning bolt so much stronger.
Cool. All right. Well, look, I mean, hopefully, I guess that probably brings us to a bit of a wrap here, Ty, in terms of discussing it. So I guess just to summarize, things that we think change the game with these types of ones are finding certain candlesticks around these key levels, using, of course, Fibonacci in terms of depth of the lightning bolt both ways, and then recognizing that the lightning bolt should be happening at a key support or a key resistance ideally. And if we're taking them against trends, so let's say the trend's mostly down and we're looking for a buy opportunity, then we need to practice different types of scaling methods. So there's so much complexity in one basic system, but we all know that that's trading, isn't it? That's investing. It's about recognizing how can we stack the odds in our favor. And I think some of these, the Fibonacci method, and then obviously having a scaling approach to it can be very, very powerful. So yeah, I mean, I'll hand it over to questions, Ty, if anyone has any.
Yeah, we'll certainly hand it over to some questions. But one thing I will like to say, just in case we do run out of time, is that Thomas and I were probably a little bit, we do presentations like this 5 times a week. So we do a lot of presentations for our own community. But I've got to say, we were probably both a little bit nervous about this one because we do have an enormous amount of gratitude and respect to a lot of people who are in this community. You've been our mentors for a long time. And I know there's a lot of highly qualified and educated people in here. So we really, really do appreciate the opportunity that you gave us to present to you. And aside from the fact that we were probably a little bit nervous because, like I said, we do this all the time, but doing it in front of people who obviously have led the way, for us to actually get to where we're at, we're very, very grateful for that. So we definitely both thank you dearly for giving us the opportunity to present.
Guys, I don't have a question, but I just want to say thank you for your presentation. And what you were discussing tonight is something that is so important to me, and it's understanding the dynamics of a market, understanding supply and demand, and it's something that a lot of traders, even experienced traders, don't apply to their trading.
Yeah.
For example, you're reacting to areas of support and resistance, or you're looking at how the market reacts to those areas, which is so important. A lot of people come to TA and they look at support and resistance or Fibonacci ratios, and they just expect the market to do a certain thing rather than reading what the market's telling them around those areas. So I just want to thank you for doing that and presenting to us such a thoughtful presentation.
Oh, no worries, Larry. Yeah, I totally agree. It takes a long time to click, and it's like you'll get this all the time as well. I had someone message me the other day, well, actually all the time in the live streams. Oh, Tom, it's a head and shoulders. I found a head and shoulders. Man, I'm trading it like a head and shoulders. I'm like, are you crazy? Like, think less about the pattern and more about the story. And the head and shoulders, believe me, they're not technically, they're not sound head and shoulders, but you know what I'm saying? Like, the point is that they don't think about the story. They only think about the pattern. They think about it in a one-dimensional way. And that's a big game changer. And I think, Larry, you were really pioneering that space as well.
Mm-hmm.
That's a good point. I've watched a lady who I know is one of the best traders that I've ever seen. And I've watched her for about 8 years. And she's entered into a TA group. And then she's talked about patterns. And all of the perfect people have come in and gone, that's not a descending wedge. That's not this pattern. That's not this pattern. Yeah. She makes money hand over fist. She doesn't have it right in terms of precision, but she actually knows how to make money. So it's fantastic. I have a question specifically. When Larry said this, you said you do Forex. Are you not doing so much Forex because it's dead boring intraday? Because as an old Forex trader, I used to love it. But This bores me shitless now. What's happening?
Forex is still there, but it's only there for the London Open, really, in our opinion. There's obviously liquidity hunts there, and there is a strategy you can use around, that Frankfurt kind of open into the first hour and a half. I think after that, you'd probably be wanting to, the swing is really bad this year in Forex. It's been much weaker.
Yeah.
I think a lot of it's got to do with central bank policies all kind of equaling each other out and creating a randomization of price. But yes, I would agree. Forex, we've done less Forex in the last couple of years. We've obviously, the YouTube is focused heavily on stocks, and stocks are, anytime you get like a correction or a big crash, they become very, very, very interesting for a couple of years there. And that's where I guess so many people are. And we love stocks anyway. I'm very passionate about it.
And I think, David, also to help answer your question, we've really delved, especially over the last 5 or 6 years, we've gone very heavily into the option space, because we're always looking at ways to, I guess, get the best result for the smallest amount of time. Because to us, trading is a lifestyle more than it's a full-time job. I mean, if we have to spend 15 hours in front of the charts actually making a living, then I'm not so sure that's a great living. So
you'd rather die.
Yeah. So going into the options world, really changed it for us, because it was very important. Look, one thing about currencies is we certainly cut our teeth in it, and what it did do, because they're such fast moving markets, that it almost made us more reactive to what was actually happening on the bigger stocks. So really, if you can trade technical analysis in the Forex market, everything else moves in slow motion. So I think it really gave us a really good grounding, but then we realized it was actually, there were easier ways to trade and there were better ways to make money. So I think that's why, although we play around with currencies and we play some small trades, really where we want to be, the place we want to be is in the stock market and trading options using the TA. And that's just completely changed the game for us. And I think that's probably where our main focus is. I think if they ever introduce proper options for currency markets, that would be a big game changer for the currency markets. But as it stands, they haven't even got a centralized system. So I can't see that happening anytime soon.
I think it's been enlightening, just even the discussion about what Larry said, what David said, just about somebody that maybe doesn't see a technically sound double bottom, but makes a lot of money by reading the actual the charts and the story. And I think
exactly.
If you don't take anything out today, that's a big thing.
Yeah,
that's right.
I think.
David's back.
Sorry. Yeah, I was John unmuted me finally.
Okay.
I was going to say, the problem with Forex is that it does run, but there's not a lot of retail running now, I guess. And you're normally hitting large institutional orders. And if you want to do some options, you have to go off and talk to your bank to get a tailor-made OTC option. So it's not so easy.
No, very difficult. And again, that's just way too hard. Like, I mean, and we don't want to talk about that evil thing called binary that they made up a few years ago. Oh my goodness. I think that's gone now.
I think the binary options are gone. I think they got banned in every country.
Oh, praise. That was terrible.
Yeah. The quickest way to lose money. I think that was one of the world-renowned quickest ways to lose money.
Is it going up or down?
Binary options.
Now. It was bad.
It was just wholesale theft.
Yeah,
there was. It really
gamble.
It was really, really bad. I couldn't believe it existed, actually, and it was getting so heavily pushed back in 2012 or 13, whenever it came out.
Oh, brokers loved it.
I'm sure they did.
Yeah, it did make them a lot of money, but very interesting space. So David, you don't trade currencies much anymore?
No, occasionally I do, but it generally there's not much volatility in the things anymore. There's a little bit of a US dollar trade every so often, but it's mainly the people I advise are hedges and things generally now, so commodities and stuff. So I don't do that many. There aren't that many sitter trades. It just lacks the volatility, as you said, and it probably is monetary policy, just stupid low interest rates everywhere.
Yeah, and I think that look, the fact with the stock market as well, you can actually work out or plan for a fair value. Whereas with currencies, especially when there is monetary policy and intervention, it's very difficult to actually place a fair value on a currency. So realistically, you're at the lap of the gods, where at least, if you're doing some analysis on a company, you can look at the sector, how the sector's performing, how it, where it is in the business cycle, does it pay dividends? Is its reporting good? Like, you can actually apply a lot of different layers to the analysis. Whereas, in the currency markets, like, who could tell where fair value for the Aussie USD? I don't even know if the Reserve Bank knows at the moment. So if they don't know, it's going to be very difficult for us as traders to try and isolate that and actually trade that, to that move. So I think it does make it a lot more difficult when you can't apply logic, I guess, to the moves.
All right. Any other questions, guys?
Well, my one comment I'd like to make, it was good to see presenting this this view of the world, because it's something I've used for a long while. This idea of the role reversal, I think, where support becomes resistance or resistance becomes support, because really when you look at the charts and everything it's around, it's probably the only factual point of the factual part of the market. The point at which the markets clearly indicate that things have changed, and it's not an assumption by you. It's something that derives out of the action that the market makes themselves. So it's really great to see that again. It hasn't been talked about for quite a while, so it's good to see you bring that approach back.
Yeah, I think it's everything. It really is, because it's the confirmation, and like you say, we always trade what we see, and I think the idea of actually trading and trading successfully, I think, is taking a lot of the subjectivity out of the market, and you can't deny a role reversal. You could potentially deny a trend line because that's very subjective, but a role reversal is only a solid one at that. Really can't be denied. It's fact, and I think when you're trading market fact, it just takes a lot of the subjectivity out of it. I think that's probably the key. So I'm glad that I'm glad people appreciate that, because it's we talk to a lot of people who've never even heard of it. So,
well, yeah, I think the number of people using technical analysis today is significantly higher than the number of people using technical analysis back in the 80s. But probably the number of people who actually understand technical analysis is very, very small.
Yeah.
Because everyone's...
Yeah, but I think though, even in saying that, like even though they're all automatic on your platforms now, I think that any indicator that you use, you really need to know why you're using it. And I think that's probably a big flaw. People just hear it, they'll Google an indicator and watch a YouTube video on it, and they think they're an expert on it. But realistically, if you don't know the why and the how an indicator is actually doing something, you shouldn't be using it, in my mind. And in our course, like, we only focus on 5 indicators specifically in our course, and the whole module is basically explaining what that indicator is, why it works. So when you do apply it, you know why it's actually doing what it's doing, and most importantly, probably more importantly, when it's not working. and you can't possibly know that if you don't know how the indicator works.
No, we'd just like to say thank you very much, and obviously I look forward to seeing Larry in the chat sometime if he ever comes in, but he might not come in now because I'm doing 6:30 a.m.
It's too late at night for me now. 6:30 a.m.
No, 6:30 a.m. We're moved to the close. We're at the close now.
Move to the close of the market now, so you can just if you get up early, Larry, you could be.
No chance.
Just get the coffee out, Larry. Come on in.
With lockdown, it's about 9 a.m. wake up now.
Oh, okay. Exactly, and that's why Tyrone and I like to keep it basic. I really believe that one of the biggest things for me is I always think, what is the retail person thinking, and what are all the traps that retail person made or I made 10 years ago or 12 years ago? And then what also is Wall Street really telling you about the market? And there are so many of these sentiment indicators you can get as well nowadays, where you can really see the flow of the retail trader. So you might be able to say in currency, you'll be able to see whether they're bullish or bearish. And when they'll be 80% bullish, and the market will literally be doing this in currency trading. It'll be making that kind of pattern will happening, but 80% will be bullish. And you just know that this is going to continue on until it hits a point where it hits that key.
Until they change their mind.
When they change their mind, and then they start making the wrong decision again, and then you can keep going with them. So I take a lot of confidence actually in sentiment indicators of the retail herd. And you can get you can get hype equity ones for stocks now. There's some great tools out there.
Yeah, it's a very contrarian view, but it's basically how it works. I mean, well, the minute David Koch starts saying oil's going to $100, it's time to start selling.
That's right.
Bail.
He's wrong about just about everything.
Well, because it's all got to do with you talk about it as it becomes fact, and to do it to a degree, I have to do that on the YouTube videos because you've got to stay impartial to a degree, in the middle zone. But even like these tools, like this is part of our Discord community, and what you'll notice nowadays is you can pull data on anything. So this particular robot, you can pick up, let's say the SPY, and you can put in the month, the date. So let's go to 8. So this expiry this week, and then put 2021. And then what it'll do is it'll pull you data for the SPY. And this data will literally be all of the different put levels. And you can see all the put walls and the call walls, as I call them. So basically these are the higher strike levels. And we're currently in this price range here. So if Wall Street want to make maximum amounts of money, they'll trap it between here and here and only let it expire somewhere in that curve for the week. As we know, most options do expire worthless. So yeah, this type of thing, you can get this stat just like this now. This was not here 24 months ago.
Can anyone join your Discord?
Anyone can join the Discord. This particular one is part of our private one because we pay for this data.
Right.
So it's 7-day free trial if you want to check it out. But yeah, like even like insider trading, and it'll show you all the different stats on all of the different insiders in the in the kind of upper management areas on the different stocks. It'll automatically spit them out daily for you. Analyst upgrades, like this information, we all knew it was there and we all had it, but you had to pay a lot of money for this type of stuff. And even dark pool activity and option sweeps, like it'll show you all the big positions, the dates, as soon as they get placed, what the strikes are. They're all buy puts and buy calls. It's phenomenal information. It just did not, I cannot think of a time, Ty, and everyone out there, like Ty, I was going to say, have you ever seen this information be so readily available?
No, it's just getting better and better. Yeah, like this was not available even 18 months ago, I don't think. Not as like easy as it is now. No
way.
Hello, it's Francis. I'll just make one comment.
Sure.
When I used to actually draw the price action on a chart,
yes,
just for a few stocks, I really felt I was conscious of what the stocks were doing. Every few cents they moved up or down. Nowadays, I think it's quite easy to glance at a chart on a screen.
Yeah.
And think, oh, there's the chart, and then think, yep, and move on without really being mindful of what it's doing. So I wouldn't decry the old arts.
Yeah. Francis, I totally agree with you. When we were doing this really early on, Larry made us draw every peak and trough with lines and connect them up. And although it was a very laboursome task, it actually made us really appreciate identifying the correct highs and lows and lower highs and lower lows and higher highs and higher lows. And now we look at it and it's actually automatic. And we actually employ what Larry made us do to all our students too, that we actually make them draw the peaks and troughs, not just say we're getting higher highs and higher lows, but actually physically count the candles up, making sure they are printing higher highs and higher lows, and actually drawing them, because actually drawing them and physically going and doing that does actually give you a full appreciation of what's actually happening. So 100% agree with you. I think it's a lost art. And I think it's a very, very important aspect. I know we have to do it a lot at the start, Tom.
Yeah, and I think that's what the millennial, like everyone's making the wrong mistake of it now, is when you were doing that, you were probably also focusing on very specific blue chip stocks or stocks that you understood were maybe good trading opportunities. And what everyone's doing now is jumping to the next big thing. And they're not considering anything about the charts. They're not considering about the liquidity. They're not considering about anything. It's just pure FOMO action. And I see it in my stream all the time. Like someone messaged me today and they're in whatever this is. I don't even know what it really is, Sava. And they're buying it because of the story and the news is crazy. But this is a chart that most of us here would look at and go, well, firstly, this does not look like a great trading experience. But look at the history on the damn thing. Like, it came in January. I mean, this is a stock that you go, it's a no-go zone. I wouldn't even put the time in on the chart on drawing it through on that. Whereas an Apple, I would like to know that very, very, very well, because I love Apple and I think it's a good trade stock. So.
It's a penny dreadful mining stock almost type of chart.
It's a devil pharmaceutical, this one.
Yeah, no. It looks like the penny dreadfuls in the minings too.
Exactly.
This is a very familiar chart to me because it looks very much like the gold price over the last 100 years.
All right.
If you put the gold price chart on a
70s,
monthly or quarterly basis.
Yeah, 1970s. That big boom, then a bust down. Yeah, I could put the gold chart on.
Did they have a cure for COVID or something? Is that what it was?
It was some kind of cure.
Ivermectin, Larry.
There's
the horse paste.
Yeah, Joe Rogan told them so.
Just remember, antibiotics are used on horses too.
Oh my goodness. Yeah, that's that huge run that happened over there, isn't it? And that's the thing I think also that I always enjoyed studying back is kind of thinking about like 1990s Japan, thinking about this gold boom, and that helped me a lot. Understanding that gold boom, understanding the global financial crisis boom of metals actually helped Tyrone and I make much more better informed decisions on gold and silver last year. We recognized that when this thing hit 2000, that we better start scaling off heavily or at least deposition ourselves, because we knew that it was in a boom. And we also knew that there was a timing between the market hitting a new all-time high and what had happened previously. And I overlapped them, and I noticed that when the market hit an all-time high, last time from the global financial crisis, gold actually started stagnating at the same point. And that was something that really rang true in my mind. And I always go back and try to look for these things. And I think most new people in the TA space, they won't look past a day or two, or even 3 or 4 weeks.
Yeah, I was going to say it's a bit generous.
Maybe a few hours, and maybe the next Wall Street bets or stock twits or whatever. Yeah. Cool. All right. Well, I've posted the link if anyone wants to join into the public community. There is a robot in there you can always check out as well, more of a basic one. And I just want to say again, thank you for having us on. And you guys are obviously a wealth of knowledge that I think is, highly underappreciated in the world of TA at the moment.
Thanks a lot.
Well, thanks very much.
Very good. Appreciate it.
No problem at all. Thank you for having us.
Thank you for having us.
Thanks, Tom and Tyrone.
Yeah, thanks again.
Thanks, everyone.
Bye.
See you guys.